It is Sunday night, and we're waiting for the markets to open for tomorrow morning. We got a few plans this week. We're going to sell out of our Adobe position, number one, and that is going to be because of our high concentration of software companies in our portfolio. I'm very bullish on Adobe. I've discussed it in the last few videos. I think it was undervalued, under $450, and as a matter of fact, we're up about 5%. And it's a shame, that I have to sell out of this. I don't really have to, but when we take a look at our portfolio, we scroll down here. We got Shopify, we got Snowflake, Shopify, Salesforce, Palantir, and Adobe as our smallest holdings. But all of those are software companies, so it's just not a great idea to be so overweight. I'm already like 100% technology in my portfolio. Besides some of the holdings in the SP 500. But look at this glitch right here. Look at this glitch because of the NVDA split. Man, I wish that was true. Speaking of which, look at this NVIDIA. It's showing down 90%, but obviously that's not the case. Our average cost now is showing as $82.74, and the NVIDIA post-split price is at $120.78. Super exciting stuff. Says we got 12.25 shares. That's awesome. It's awesome to see. Very exciting. I think this is like the first stock split that I've actually held a company through, so it's a new process for me. So like I said, selling out of our Adobe position Monday morning. I'm not bearish on Adobe. I'm very bullish, and it has earnings coming up, and it could crush earnings and skyrocket higher. But it is what it is. And compared to the other holdings in my portfolio that are software, I think Adobe is the one that doesn't belong. So look at this glitch. It comes back and forth and back and forth. Look at that. Oh my gosh. I wish I had 29 grand in my account. Now we have a Fed meeting on Wednesday. Wednesday is going to be a huge day. So we got the Fed meeting. It's interest rate decision. I don't think they're going to cut rates. I don't. Things are are doing just fine. It's a lot of stress in the economy, but it is what it is. Stocks seem to be doing just fine with them high. So we'll see how that goes. It's an election year. We'll see how that pans out. But expect a lot of volatility. It's going to be a crazy day. And after market, I'm not sure what time it is, but you got the Tesla board meeting or shareholder meeting that's going to discuss the shareholder vote about Elon Musk's compensation package. So that's going to be a huge deal. Now, where are we going to be putting our money at this week? And that is going to be VOO, baby. You can't go wrong with SP 500. And the reason being is because all these stocks are just not in my buy range. You got Google, Microsoft, Amazon, the whole Magnificent Seven's that, is just hot. It's just richly valued. You take a look at the QQQ. Look at this, the QQQ's PE ratio. Where is it? Where's the stats? Right here. 34. A price to earnings ratio of 34 to QQQ. That's insane. Really expensive. So stocks are just richly valued right now, and I think we are going to get a pullback soon. I'm not going to try and time the market, obviously. I actually wanted to mention a quote today that I saw, and it's by Peter Lynch, and it goes as follows. Quote, far more money has been lost by investors in preparing for corrections or anticipating corrections than has been lost in the corrections themselves. So to explain that quote in simple terms, basically saying it's like that quote, time in the market beats timing the market. So you can't time the market. And a lot of times that you try to do that, you're going to get burned and you're going to miss out on a lot of the gains that the market provides. So just DCA, dollar cost average, that's when you buy a little bit every day or every week or whatever. DCA, hold long term, buy high quality companies that you understand, that you believe in. There's nothing wrong with having a few smaller plays that are a little riskier and could play out. That's why I got these plays right here. I'm going to try and keep these plays under 10% of my portfolio. That's the goal. That's what I want to do for my risk management. That way, if any one of these plays, goes to zero, does it suck? Yeah. But it's not gonna destroy me, But if it 10x's, then that'd be awesome. That'd be a great return. So I want to beef up my holding of the SP 500. I want it to be a huge chunk of my portfolio. If I'm being honest, I want this to be 50% of my portfolio, and it's only 13 right now. But that's because I have such large exposure to the Magnificent Seven individually right here. So yeah, I want it. I want it 50% plus. I do. Like I said, I'm in it for long term, and SP 500 is hard to beat. So we're gonna do that. And this week's gonna be very, very exciting. I'm sure I'll make a video or two this week discussing, Wednesday and any other, things that happen before then, or other things that happen in the market that's interesting. So thank you guys for watching, and I'll catch you guys later in the week.